Hey, I tell you, folks, I was absolutely terrible at this topic when I was in grad school. When it came to probabilities, I was terrible. But you know what? Uh, Have you ever wondered why some traders seem to consistently make the right moves and the others struggle despite their best interest? Could it be that the trader who understands high probability trading and the one who struggles, that makes all the difference? Because what I found is even though I was really bad at probabilities in school, I've learned the secret of how to determine when I have an edge on a trade and when I don't. And so today we're going to be talking about high probability trading and how critical it is. And before today's over, I'm actually going to be sharing with you the probabilities of candlesticks. If you're interested in that, that's really great. Hey, before we get going into the rest of that, though, I have a major question to ask, and I'll come back to that as soon as I look at the following chart. The chart I want to take a look at is the spiders, S&P. And I'm going to come back to a question to Anil momentarily. I'm going to ask him the question. And am I showing my chart, Anil?
Yeah, go ahead. No, currently I'm not seeing your charts.
How about now? Okay.
Got it.
Okay. Hey, well, what's going on with the indexes? And one of the things that is a really concern is we're having this really great rally. However, we have not had a strong follow-through day yet. And so that's why Investor Business Daily still is showing that they are not going to a full exposure rate for the number of shares. So what can we take away from looking at the spiders? Well, one is we've had this really nice rally, a zigzag rally. That's positive, coming up to a new high for this part of the rally here. But look what's waiting for us. We have a ceiling up here, a ceiling of resistance at the past highs. The candlestick on the spiders today, while it is not a reversal signal, we know that this level up here would be a likely place for price action to stall out and then fall, at least to set up another zigzag. Or because there is weakness in this rally, would the spiders actually go into a more significant correction? And so I know two things about this chart. There's a high probability that if prices get up to this past level up here, that they will either slow down and pull back, and if prices pull back from where it is right now, there's a pretty good probability that when it gets down to these lines here, this moving average, that's the 8-day and or the 50-day, that's where it will slow down and bounce back up to the upside. If I'm bullish, I'm going to be looking at, I want the price action to pull back here first. That way I'll have additional momentum and a running start to break through that level right there. Notice on this whole rally to the upside, really poor, below average volume. So on the spiders and the S&P, I'm going to wait and see what happens next week. However, it could be setting up for a high probability fail down to the downside. So with that, let me jump back to this section. And so hey, welcome to Trade Your Way to Freedom. I'm Dennis Wilborn, and joining me today, of course, is Anil Parikh, the organizer of the Delaware IBD Meetup Group and the developer of the triple screen stock picking system. Anil, it's always a pleasure to get to chat with you and talk. And I love it when we put our heads together to kind of just pick at issues on the stock market.
No, it's great to be here, and I'm also learning a lot from you. So thank you.
And so, well, the question is, okay, what are your thoughts on the probabilities of the indexes continuing to rally without a confirmed strong follow-through day?
As you know, I'm always looking at my triple screen system, and I'm slightly agreeing with the system that IBD is talking about. But what I'm looking at my chart, the daily signal came in. It just came in about 4 days ago, and the weekly, the MACD has gone bad, and I hope it turning around.
Okay.
The other two are okay. So as long as the moving average cross is good, I'm hopeful.
So do you tend to want to kind of carry a bullish bias or a upside bias? Because I know, like in Lee Tanner, our good friend Lee Tanner, he talks about that he kind of always has a bullish bias, simply because going back to 1929, there's only been like 7 or 8 stock market crashes, and it has an upward bias. And so that's why he usually doesn't stop margin type investing, even when the market's pulling back. But do you kind of tend to have a upside bias?
I have an upside bias, but it is guided by the triple screen system, because the sole purpose of the triple screen system is tell me, is the trend continuing or the trend has reversed?
Okay, cool. Yeah, and I've been watching, and we had, and I thank you so much for chatting with me about on your triple screen system when we chatted, I think last week about it, or week before last about it. It was really awesome. And so, hey guys, before we get going, I just want, if you're struggling to balance your hectic work schedule, your life schedule with trading, I want to share a story about this super mom and who's a youth coach, and she has found freedom. What kind of freedom has she found? Well, she's found the freedom. Oops, there we go. This super mom and youth soccer coach emailed me and said, Dennis, she goes, trading your way to freedom. She said, and her name is Kat, she said she loved the book because by practicing the strategies and setups in the book, she was able to set herself free to do more of what she loves, which is coaching soccer and being a mom, being a wife, and that type of stuff. And it set her free and to be able to do that. So, maybe I should have named the book The Busy Person's Guide to Successful Trader, because that's what it's looking like it has been for many people who have watched it. Anyway, I'll put a link down in the description of how you can get a hold of it. And there's a whole bunch of bonus tools that will actually help simplify your trading that go with it. And it's also in audio right now. So, okay, Neil, let's take a look again now. And we've already taken a look at the spiders. And it appears we might be hitting a bit of a ceiling where prices could start stalling out, but we'll see what happens with that. But let's jump over and take a look at the other entities. And I'm going to give you if you hang there, I'm going to give you a potential, you and everybody else, a potential trade that could be setting up. Look at this. This is the Russell, IWM, as represented by IWM. I have a significant bearish reversal signal on today's candle. This is a bearish engulfing pattern. And if you hang around a little bit longer towards the end, I'm going to be telling you about what's the probability of a successful trade utilizing the bearish engulfing. Bearish engulfing, momentum is shifting over, and we are just about 75% up to this past move. this rally attempt looks as if, let me blow that up a little bit. Grab that. Okay, on the weekly chart, as you can see, that rally attempt looks like it is failing. And we'll watch to see if that drops down to the downside. And so we've got a big test coming up next week on IWM, the Russell. To really keeping a hard look on those momentum indicators. It continues to be the lagger amongst the winners. So the other one is the Qs, Q. The good news about the Qs is we do not have a bearish reversal signal as of yet. However, similar type situation, price action is working up into a past highs. So there's a level of resistance there. And of course, the all-time highs is a ways away. So look for any of those ceilings to be a place where the NASDAQ will be challenged to continue going up. And note what's going on here. Lower volume, pushing its way, to on this rally attempt, which tends to, has a high probability of resulting in a failed rally and a pullback back to the downside. And before I ask Anil for his thoughts on this, I am going to share, excuse me, an entity you may, and this is a bonus, guys. Take a look at TZA. TZA may provide you, this is the inverse leverage ETF of the Russell. This is an excellent reversal signal if it holds, which means it has to hold about 1814 today to be valid. And that may give us an indication that this would be in a buying territory. Notice, watch for the momentum to shift up to the upside like it's getting ready to do. What would be my target on this if I did buy this? Let's say I bought about the midsection. It would be moving back up to the trend line, which is about 7% away, or maybe higher from that, higher to that, because this would represent a higher low to this move here. So that's what I've got on the charts, Anil. What's your thoughts on the indexes?
My system shows exactly the same pattern on all the three indices. I have a daily signal about 4 days ago, and it's on. And the weekly signal is still pointing upwards, but it's gotten a little weaker.
Okay.
So
when it starts now, is it on all three entities that you're showing it that way?
Yep.
Okay. And so that is interesting. So on your triple screen, if the daily goes into a downside reversal,
then it would be a concern, because if I talk about S&P 500, that means
right,
the 500 stocks collectively telling me that it's going south.
That's something important to know. Hey, one other question, Anil, is okay, like on the Russell is the weakest of all the entities. Is it also showing that it still has a triple screen to buy on the daily, or is it really showing how it's weaker?
No, it's buy on the daily. That came 5 days ago. It's still holding.
Okay.
And that MACD is up, RSI is up, and the 820 capping is up.
Okay, excellent.
But weekly is slightly weak.
The weekly is slightly weak. Okay. Because I know you watch the triple screen a lot like I watch my momentum indicators. And when those momentum indicators start to shift, that's when I start, paying attention. And especially if my volume is falling off, I want to be absolutely ready to rock and roll on that. So, well, here's where we're sitting as of, we actually had a really good week and a half to start the month of May. We're back, accelerating, trying to get back on schedule. I don't push anything. I don't change anything about the way I'm doing it, just because I'm a little bit behind schedule on my trajectory, I let my system work. And so I'm very pleased, beating the S&P by a little bit over 4% right now. And that's what I typically measure against. As you can note, the Russell is still the bottom of the barrel. So with that, let's go ahead and move into our next session, which is Anil, a lot of people, realize, well, they don't realize they deal with probabilities on an everyday basis. I mean, they really do. There's a probability of getting hit by a truck. There's a probability of this. Now, typically, but at the same time, they're not aware of it. But when it comes to trading, how does understanding probabilities really put the odds in your favor as a trader?
I think this game is probably, it is based on probabilities because it's based on my psychology and what the fund managers are doing. So if there is a way to understand that, that's always in your favor.
Okay. Well, when we were first getting going, you basically, chatting before we went live, you said something about how your system actually helps to improve, and by relying on a single system, helps you to improve your probabilities. How does that work?
I've been doing this system now for more than 10 years.
Right.
And now I understand it better than I used to, because when a signal comes, it's blind to everything. It doesn't know what's going on in the world.
Okay.
It's just telling you that based on the system, here's a signal. And so on an average, I know when the signal comes. If a sell signal comes, I roughly know how much it's going to go down.
Okay.
And when the buy signal comes, I roughly know how much it's going to go down. I mean, go up, unless there is a special cause, and that special cause, it could be some good news or interesting discovery, and then it just shoots up or goes down. So first level is approximately, if everything is equal, what it's going to do. And then if something really good or really bad going to happen, what it's really going to do. And that could be done with the back testing.
Okay. Excuse me. As we transition out of this, I could give everybody a big list, a long list of the points of, by having no understanding probabilities, you get 1, 2, 3, 4, 5. But I'm not going to do that. Basically, it is important, and maybe I'll go back and do that some other time. But what I found is you don't have to understand how you get the probabilities to know if they're in your favor. And this is what I chatted with you a little bit earlier about, is there's you learn to understand what the high probability chart patterns and setups look like. And why do you think people like Mark Minervini, Mark Douglas, all pointed people towards using like a max 1 or 2 setups for their trading? It's because they knew that by focusing on the few, you actually move yourself from low probability trading into high probability trading just by doing that. Because that's exactly what you're doing with your system and exactly what I'm doing with my system. Is that, correct?
Yep, that's absolutely correct.
So, hey, yeah, if you guys, anybody who struggles out there with probabilities, understanding the probabilities, got it. Just, just raise your hand or just put a Y in the comment section. Don't be a ghost out there. Put a Y or put an N hey, I'm totally good with with that. So anyway, great topic, Anil. Just talking about probabilities, though, I want to jump in and just share something really quick with folks, and that is Well, actually, we're going to talk really quickly about the stocks we're looking at. High probability stocks. And today I'm going to show you a couple of high probability stocks, one with a high probability going up, the other one with a high probability to go down. However, what we're going to start with one of the picks that Anil has, and I really like this stock, Anil. And that is CrowdStrike. So what's the story here?
It is on today's stock on the move. Both weekly and daily triple screens are active. Weekly is active since April the 10th, and daily just came in. It had a partial sell signal and again showing a buy signal. That means it's rested a while, now turning around.
Okay.
And in the back testing, because I'm following only one system, I can back test. And there the batting average is 40% and risk reward is 5.9.
Oh, that's nice.
So on the long run, if it continues like it has done in the past, you have a good chance, but that you cannot completely rely on that. So you got to watch and set up your stops and take partial profits and all that.
Okay, excellent. So here's what I'm looking at. This one, very interesting on ARM. I kind of like ARM. We have to recognize that ARM is one of the top three in the same sector as NVDA and AVGO. However, it's a lower priced one, and the rest of those are pushing $1,000. This is around $100 right now, and it had earnings they said was going to slow down in the future, and so it did a nice little drop into earnings, but now it's kind of getting a rebound back up. I like it if we push back up above the 50, but I'll also look at some kind of a pullback in here to the 8-day moving average also. Ideally, I would like to see it over here on the weekly chart, break above the 8-week moving average. And as you can see, my momentum on the weekly starting to turn up. Momentum on the daily is already going up in the up direction. So I like ARM for one of my picks. And this is my high probability pick to go up to the upside. The next stock is T. Oh, man. Darn it, Anil, hold on a second. Oh, don't do that. Sorry, guys. So, Anil, let's go back really quick and we'll show. I'm going to flash up your initial. There you go. Thanks, guys. Let's see. You were looking at CrowdStrike. You don't have to repeat everything you said, but I'll just have the editor. The editor can go and imagine that.
Just to quickly, as you can see on your chart, on your weekly chart, it was nicely going up. Then it pulled back, and now it's turning back up. It's still in the base, and it has very strong backtesting probabilities. So I like it.
And the thing to remember also is that because the market went into correction, that reset all the base counts, right?
Yep.
And so this is a stage 1 base, which is totally awesome. And so, and mine was ARM, excuse me. Similar type information here is in the notes on my script. I'm gonna have to basically make sure I have a note that says switch to the charts. As I say, ARM looking good. We're about $110. If I close above the 8-week, I'll look at that as being exceptionally positive. Next week, I'll be looking at this for the potential of taking a trade off of the 8-day moving average, because it looks like it's a high probability that we're shifting back to move up to the upside. This is a significant mover because like from where it's at right now back up to the past highs is about 34%. Next up, TSM. So now TSM, this was your pick, Anil. You're getting what appears to be, at least this is one heck of a nice looking double bottom, IBD double bottom type pattern.
Yes, and again, it's stuck on the move today.
Okay.
Basically, kind of same story. The weekly signal has been on since November the 13th, and it pulled back and coming back up, and that's the reason now the daily says, hey, let's pick it up. So we have a daily signal.
Okay, awesome.
And the back testing fundamentals are great. Batting average 50%, and again, risk reward 5.3, which is great.
That is, yes, that's excellent. Yeah, I'm liking this one, Anil. You could almost buy this approximately where it's at. It would probably do a little bit of a shakeout here, but we're getting a nice breakout. So I like TSM. Looks really good. Nice volume pickup on the breakout. And so this must be news related, right?
I'm not sure. I have not dug into it, but it looks
okay.
Like.
So now you have to recognize that not all stocks have a high probability going up. Some of them have a higher probability of going down. So I'm going to go pick on Tesla, my old friend. Now, a couple of things going on with Tesla. Look, we had a really nice move up after earnings, but then as it went higher, back into a level of past resistance, just look to your left. That was right there. Now we're selling off. Interesting that the volume is also slowing down on this sell-off. So I think there's a higher probability of Tesla to continue down. The news on Tesla is all bad. One thing, once you get below the moving averages, it's below the 200, below the 50, below the 8, that increases the probability you're going to continue to fall. So the high probability on this one is to head to the downside. Where might it turn around? Let's see if it comes down where it broke structure here. It may turn around right when it gets down against the downtrending line here to kiss the trend goodbye to bounce to the upside. That's one of the things that could happen. If it breaks that, stand by for a further drop down to the past lows and lower as we see here. Because I've got a target down here at 101.81. That's a technical target. We'll see if Tesla gets there over the next little bit. But it's definitely a time, if you bought Tesla on the way up, it's a good time to protect your profits or minimize your losses. And so that's what I've got going with Tesla. Anil?
Yeah, Tesla had a buy signal, I think, around earning, and it really popped.
Yeah.
But since then, it's coming down, and it looks like today it has crossed the 50-day line. And I think that buy signal is going to go away pretty soon, looks like.
Yeah. And based on, my triggers, the buy signal, at least on the daily, has definitely gone away as soon as this, kind of crossed back down here. Yeah. On the weekly, this is on my momentum chart, my TSI. So cool. So, as I promised you, I was going to share with you what kind of probabilities are there on candlesticks. And so that's what I'm going to do next. And so here's a swing trading tip. Did you know that some candlestick patterns have higher probabilities of success than others? And I basically, study candlesticks. I study the probabilities that are put out by Thomas Bulkowski on what he studied about chart patterns and candlestick patterns. Did you know the bullish engulfing pattern, or bearish engulfing pattern, is the number one high probability pattern that's out there, with the bullish engulfing being the strongest. 79% probability of success if you understand where and how a bullish engulfing takes place. Number two, piercing line. Probability of success, 78%. piercing line is the cousin to the bullish engulfing pattern. And then this shows the expected move after the pattern. And then, looking at his book, you can also find how much further it could go. Morning or evening star. This is both a bullish and a bearish candlestick. It counts for 78% of the is a probability of 78%, with about a 3% move after that happens also. Hammer and hanging man. Remember, not all hammers are hammers and not all hanging men are hanging men. The probability of success, only 66%. Bullish and bearish Harami. The bullish has a success rate probability of 63% with a small initial move. Interesting on both of these. Small initial move, only 1.5 and 1.56%. So remember that candlesticks tell us where, but they don't tell us how much. We have to depend on the other technicals to determine where your price targets are. But if you like this, hey, please drop a note in the comments saying candle, and I will make sure that you get linked up so you can see the video that I put together. That is just the candlesticks you need. Just the candlestick you need. If you're already a premium member, you already have access to that. But if you're not, just drop in just say candle in the comments, and we'll get that over to you. And remember, master the few and watch for success. So, Anil, what's your high point? What did you learn today?
Importance of probability. It got me thinking again. So,
all right, excellent. Me too. I'm thinking about putting together just a really quick little simple. This past week I heard the most brilliant discussion, or a man, discussing about charts, and he was telling how simple it was to actually trade. And he referred to the stock chart, and he said, all you have to do is wait for prices to get to this line. He didn't tell it what it was. This is just line. Every time it bounces off the blue line, if you bought, here's how much you would be ahead. And you know what the blue line was? It was a moving average. Now, by just calling it a blue line, think about how much that simplified the process and helped many, many more people understand. So anyway, Anil, thanks for a great session.
Thank you.
And I think we achieved our objective. We wanted to get it down a little bit. And so we're at 33 minutes. Want to say aloha, God bless to everybody. And look forward to seeing you and chatting with you next week. And I'll leave that up. So thank you all for joining. Hey guys, remember, all materials presented are for training purposes. Traders should paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of promised or future performance. So thanks for joining, everybody. Hold on, Anil.